Nothing in this podcast is intended as investment advice, and the people in this podcast may hold positions in the stocks they talk about. Do not buy any investment based solely on a tip or recommendation. Please do your own research.
Hello and welcome to the Sunday Roast. It's Sunday the 25th of January. I'm Phil Carroll.
I'm Kevin Hornsby.
And I'm Charles Archer.
Day 12 of this bloody awful, grim back pain, like coldy, flu-y symptoms, man flu basically is what I'm going to blame it on. I'm feeling awful. So apologies, my voice comes over as being very nasal. Well, that's because it is.
Yeah, I'm similarly awful. And we were saying before the call started, like, you're well enough to work, but not sick enough to go to bed and just sleep it off. It's kind of a horrible middle ground.
Positively healthy with the sun over there, chewing his peanuts, living life.
So the question I'd ask you, if you had a job, would you be off work or working?
Well, if I had a job like an employee, I'd be off work for 3 weeks.
It'd be a duvet day, as they call it.
Yeah, 100%. I'm self-employed. You don't get paid unless you work, so zero chance.
Yeah. Exactly. So what mentality does that say the world lives in?
Yeah. Exactly.
One where unemployment is rising in the UK.
Exactly. Let's have a look at some of the news stories that have dominated the headlines this week. I think there's really only one, and that's...
Try and do it without mentioning Trump.
Yeah, 21st of Jan, 56th World Economic Forum in Davos. President Trump delivered a high-profile address that reignited controversy over his push for US control of Greenland, a semi-autonomous Danish territory prized for its strategic Arctic location. Trump publicly stated he would not use military force to acquire the island, a shift from earlier ambiguity on the subject, while insisting on immediate negotiations and linking Greenland to US security priorities. So, are we surprised that he did a U-turn on that and on the tariffs?
Well, this is the way he's operated for the past few decades, like say something outrageous, the art of the deal, and then row back on it. He has wanted Greenland for a very long time, has the United States in general. I mean, my perspective on it, though, beyond his classic make threat and then row it back, because A, it showed Europe was a lot stronger than a lot of people thought it would be, and B, when pension funds in Europe started selling off US treasuries, right, at the same time as the Japanese carry trade is unwinding, at the same time as China is selling them off and exchanging them for gold, suddenly US debt is getting a lot more expensive, and it showed you very quickly that the bond market is in charge of the global economy. And interestingly, with gold going to record highs and silver and platinum and all the precious metals, we're in exactly the same quandary where people aren't trusting the US dollar as much anymore, and the only way to get the precious metal prices down is for the US dollar to regain credibility, and that means less debt and a reducing deficit. But I don't see that happening anytime soon.
Yeah, and obviously the markets reacted positively to Trump's climb down, with the European and UK equities rising. FTSE indices both made gains after tariff threats were dropped and a NATO framework was agreed. So I guess moving on to that framework, we saw Trump's meeting with the NATO Secretary General Mark Rutte there in Davos on the Wednesday. Was focused squarely on Arctic security and cooperation rather than any change in Greenland's sovereignty, with both sides discussing a framework to strengthen NATO coordination, surveillance and presence in the Arctic amid concerns over Russian and Chinese activity. So do we know what these kind of like discussions have really focused on, other than a bit of security? I mean, is he kind of rolling back on on taking control of Greenland? What would it look like?
Well, listen, mate, I don't really want Greenland. I want the resources there, and I want to put as many military bases as I possibly can on Greenland. Okay, I didn't really want Greenland. That's the deal. Yeah. Okay, we can do that.
Well, I think it's funny, isn't it? Because all the US really wants is control of the new Arctic shipping lanes that are going to open up as the ice melts, control of new critical mineral resources which are being discovered and are of tier 1 quality, and the ability to put more army bases up there. But all of those things, Greenlanders and the Danish were quite happy to have in the first place. Yeah. The rhetoric wasn't needed.
Who has explicitly not signed up to Donald Trump's this Board of Peace initiative, which we saw as well in Davos this week?
Yes, Dharma.
It's us.
Yeah, the UK.
The classic, what was it? Is it $1 billion or was it $1 trillion? I can't remember what Trump
but that's only after 3 years, $1 billion a year. After 3 years. First 3 years are free.
Yeah, that sounds like a great deal. I'm not really sure what you get for that, but yeah. I think we should stay out of it. I mean, to be honest, first 3 years are 3 years for classic because when is Trump gone?
3 years.
3 years from now. Yeah. And then it all collapse anyway. And to be honest, when Trump leaves office, it's probably the point at which the precious metals market will come down a bit. I guess we'll see.
Well, what's happening with all of this is he's trying to undermine the organizations he can't control completely. So he's undermining the UN, World Health Organization, NATO, all the things that he can't control completely. He's trying to undermine them. It's America First playbook.
Yeah, well, I mean, all you have to do is look at what he's trying to do. He wants sphere of influence. He wants sphere of influence over Greenland, over South America. And if you get those two, anyone who's ever played Risk, all you need to do is, you have Greenland, you have Alaska, you have South America, then the US is safe. And, it's very limited worldview, but hey ho, that's the way he thinks.
Okay, well, we've got a pretty busy show this week, so let's move on to our first guest this week. We're joined by Colin Bird, chairman of Kendrick Resources. Welcome back to the podcast, Colin. How's life treating you?
Not too bad. We started off the new year with a bang. Didn't get much rest through the Christmas break with other matters within what the companies are on with. So life's very busy, but I prefer it that way because that we're in times now like none of us have experienced before, Phil. So we've it's no good sitting back and wishing you'd done it. You've got to get in there and look for the opportunities and not wait for them to come to you, but go after them. So very, very busy is the answer, but enjoyed it.
I like that can-do attitude. So let's have a look at the latest news that Kendrick has just secured an exclusive option to take at least a 70% stake in 2 rare earth exploration licenses in southern Namibia, close to the deep water port of Luderitz. The projects sit in a known carbonatite corridor, and historical work has already been shown some strong rare earth grades, including metals that are critical for magnets used in EVs and defense. Kendrick now has an exclusivity window through to May of next year to validate the data, do more trenching and drilling work, and decide whether to fully commit. So, Colin, in simple terms, what excited you most about these Namibia licenses and why move on them now?
Well, first of all, I think it's May 19th this year, by the way, Phil. Well, what rare earths? I mean, I've sort of been in and around rare earths, and there was that excitement, if you remember, 2010, 11, 12, and I think it blew up in 2013. There were Senate committees formed. There was the claims that the Chinese had all the rare earths and that this was dangerous to mankind. And the reality of the situation was that those embargoes were never really properly enforced or be able to be reinforced. And that massive Chinese industry we talk about didn't really exist. It was small operations. Today, we live in different times. These rare earth elements, very close in the periodic table, they're in massive demand for electric vehicles, for wind farms, and I think generally for one of the what's getting everybody worried, excited, concerned, call it what you will, is of course the military use. And the West and the US particularly, of course, feel very vulnerable not to have their own supplies secured where they mine and process, irrespective of anyone else, China or Russia. And so they've made a huge focus, as you know. I mean, in Ukraine, Mr. Trump was trying to get his money back, which he decided was a loan and not a gift, by a swap of the rare earths. And now Greenland is figuring again uranium and rare earths as part of the deal to get into Greenland, and with promises to inject huge amounts of money. And so from that perspective, when you're in a country that you know, when you've got a partner that you can trust, or when you've got a project which, that you have been sort of analysing to the detail we have, and more detail to come, of course, that actually shines out among its peers, why wouldn't you get involved in rare earths? And we're not ambulance chasers. I've never been an ambulance chaser because it's too late when you're an ambulance chaser. But when that I've always been aware of the opportunity. I've always been critical metal focused. Copper, of course, has always been my big focus, and that's been since 2016, 2017, that time. And all of our protestations and what would happen to copper, I'm happy to say, have coming true. Probably a little bit later than I expected, but they're coming true. So this rare earth demand, so that there's a reasonable distribution of rare earths around the earth, so to speak, around the globe, as opposed to dedicated to China and Russia, is very, very interesting to us and makes absolute commercial sense when you're involved with a partner who has a project which is in the position and has got the grades that it allegedly has.
Absolutely. And obviously the historical sampling that you've done, I think it was like 4.47% REO, which is the rare earth oxide, which I believe is 4.7 grams of rare earth per 100 grams of rock. They look sort of pretty strong on paper, but what's the first thing that you want to prove or disprove with your own work now?
Well, I think always in life, that there's a danger that when you look at projects, it's like when a person goes to a race course, he tells you about that big win he had in the third race. He forgets 1, 2, 4, 5, and 6. And one has to be very sure that, you're not just picking up the eye quotes. But, we're talking here about a big population and of samples, not just a few grabs, which look to be very, very nice. And 50% of the samples came over 2.8%. Now, if you look globally, that's much higher than the average. And if you look at that, I think the company called Critical Metals in Greenland, they're nowhere near that. And we had an average, in actual fact, of 3.4%. So let's say, we're looking at here with something 3%, and over 1% of those magnetic rare earth elements, where you preserve magnetic integrity against very high temperatures, over 1% of those, and they're in massive demand. So that helps as well. So the first thing to do, I say that we won't go grab sampling or channel sampling because we're drill ready, Phil. So what's the first thing we'll do is we've got a core which was never assayed. That now is being prepared and sent away for assay to confirm the sort of grades I'm talking about here. And then, of course, the projects present themselves as raised plugs in the desert. So they're easily seen, and the ore body is you can't call it an ore body at this stage. The deposits are basically exposed on surface or near surface. So we'll enter into a reconnaissance drill program over a wideish area around the plugs to basically confirm what looks like the average grade, what looks like the high grade, see what sort of spread we get, and of course, see what the potential is to build up a big tonnage. The literature suggests to us that there's over 100 million tons. That would represent a very, very large project. Those sort of grades would be certainly world class. So really, with a reconnaissance program, that will say whether we're in the right territory. We're entering into a project which have got the fundamentals, which leads to what I've just said. High grade, high tonnage. We'll know it. I mean, the port's not going to move. We know it's located close to the port, but we certainly have got to, by sending that sample away, confirm what we've got. And that all, by the way, finished in ore. So we've got to drill an hole nearby and get to the end of the ore body. We'll drill lithological holes to make sure we know the sequence and how these things occur. And from then on, it's a recce program on most of the plugs to see that we repeat, and we repeat very much in the same order of grade and width. So it's not early stage exploration at all, Phil. It's basically getting there and drill.
I was just looking at a lot of people say it's the percentage, but actually when you look at the composition, I was looking at the specific metals highlighted or elements highlighted in the RNS. You got neodymium, praseodymium, and samarium, and actually these are used in the likes of the magnet REs, EV motors, wind turbines, robotics, defense systems, aerospace, missiles, radar, hypersonics, which is all very, very relevant right now. And that's far more important than the light REs. So just comment on that, as you said at the beginning, about the defense, etc., and the uses.
Well, that's what brought me to the project more than anything, Phil, was the high percentage of those particular rare earth elements and their application, because their applications are all moving forward. We all know the commitment of governments that's been forced on governments to spend on defense. So from that aspect, the use of these materials is obviously ongoing and increasing. But secondly, irrespective of what China's doing, Russia's doing, the West has got to basically have its big defense spend, which is going to go into these metals. And quite frankly, there's not many companies around yet that are able to even start fulfilling the demand that the defense spend is going to create. So I think if you're in a space where you've got tonnages, which justifies the capex on the plant. You've got a long, sustainable operation. You're close to a deep port. There you go. You're in the right position. What's important is rare earths and rare earths. And as you say, you say that quite rightly. Our assemblage of key rare earths, over 1%, are in the space where they're most needed. And that, to me, is that's what drove me to the project in no uncertain way. And I had to work hard to get this project. Well, it's it's one of these things that, overnight success, what took 2 years. Our partner just wasn't here of having a partner.
So, Colin, question is, everyone in the world, including China, probably wants this type of project. So, how do you see this moving forward? I mean, the Americans are desperate for this type of thing. Europe needs it in a big way. China wants to control the market, so therefore it needs to get the project. Can you see some sort of situation occurring where those situations can help you get this out the ground?
Indeed. What I've learned in life, Kevin, is that first of all, you never put a for sale sign around your neck, because that cheapens the project. And secondly, what I've learned is that when something's in great demand, don't go out for it. It will come to you. And the best thing you can do, you being me, of course, is get on with it. And so what the company will do is get on with what it's good at: drilling, identifying, building up a resource, building up a logistical flow. And by the way, I didn't mention that the power line goes right through, the main power line to Lideritz goes right through the properties. So get the logistics right, work on a sort of very broad pre-feasibility study where you get a feel for the economics, how big is the plant, how big is the project. That's what we'll do. One keeps regular announcements on that. And I think the sort of things you're talking about in the marketplace we're talking about from a trade point of view, hopefully, well, not hopefully, I think inevitably, the approaches will come. And we're not talking about the death of the 1,000 lashes. Like I say, if this was a concept, maybe, and somebody picked up a few rocks and thought these look interesting, I don't think we'd be there, Phil. No, this is basically a result of a lot of historical work, channel sampling. We've got channel sampling, we've got geophysics, trenches, we've got an whole array of pre-drilling work, which would take 2 or 3 years to complete. And we've also got a drill hole that we're sending off. And there may be other drill holes that we're trying to acquire, locate, and get the results of. So
where is it, Colin, in relation to Hope and Gorab and Ongombo in terms of Namibia? Namibia is obviously a big place, but
you mean by location?
Location, yeah.
Oh yeah, it's down in the southern end there, not that far from South Africa, where the diamonds were mined on the coast. It's 50 kilometers from a deep water port of Lideritz. So it's about 500 kilometers from Windhoek, as you go south. And
well, you're gathering
south of the border, but there's certainly no logistical. It's a standalone project. There's no logistical connection to.
But you're gathering a lot of in-country experience here, obviously, with Hope and Gorab, with Ongombo, with and now with this, obviously in different entities, but ultimately they're all in Namibia.
Absolutely, because it's a jurisdiction which is resource welcoming, very keen on developing its natural resource industry, and that extends to many commodities, not excluding oil and gas. So they're very blessed with their minerals and very, very guarded with their minerals. And so, we're very happy to get that open Gorab mining license. And hopefully, that the recognition will be in government and in the regions that we're serious, we get our heads down, we spend money and we develop projects. And so why not work in a jurisdiction where you're well known and where you've got a lot of respect for? But of course, that is a driver, but the key driver has to be the project. And the project will be treated on a standalone basis, Kevin. We'll have its own team. There'll be no distraction for Bezant. Bezant's on a mission, as you know, as everybody on this call knows. Bezant is on a mission. And so I'd like to reassure your investors and your podcast watchers that this will not deflect anything from Bezant or Ongombo. This is standalone. And not to give anyway to sort of talk too much about the type of people who will be involved, but we are in the middle, in the throes of trying to recruit a world expert who is basically known as a world expert to be the overseer, because rare earths have got their own idiosyncrasies, and rare earths not copper, and rare earths not tin, and it's not tungsten, and it's not antimony. So we're going to get the appropriate expertise.
Good, Colin. I mean, in terms of delivering a maiden JORC compliant resource, what kind of drilling density would you need to confirm the grade continuity in that central high grade zone?
Well, we've actually set ourselves a reconnaissance target of about 1,800 meters.
Right.
And that will be true reconnaissance. We'll be carting the machine around just to see, where is the best place. But I think less than where is the best place, but more about repeatability, as we said, at the start of this discussion.
Mm.
And then, of course, when one gets to definition, you'll need having selected your area and saying to you it's near surface and it appears to be quite thick, because this first hole that we're sending away, I think, went 50 meters and didn't finish. We've basically got to drill the redrill to the end of the ore body. So you will find the place where you've got the thickest, the highest grade, where you can lead up to a real grade. But one has to be very careful, Charles, not to focus too soon on an area. If you get repeatably all over the place, other factors will come in. Availability of water, where's the closest water, where's the closest power, where's the nearest to the port, because these licenses are big. But to get to a maiden inferred resource, it will be our intention not much later than the end of the year, and third quarter would be even better.
Good. That's a good answer. Better. And in terms of recovery rates, because rare earths are kind of notorious for this. Obviously, the grades are very, very strong. But what kind of recovery rates are you hoping for? Do you think realistically?
MET test work has been done, believe it or not, on these samples, but it's far too early to predict that. As you know, it's quite a complicated process where you crush, you crush, you float, then your flotation concentrate basically goes into hydrochloric acid, then it goes into a precipitation and an ion exchange, and quite frankly, you've got to decide at anyone, but that will be part of the pre-feasibility study. Are you going to make a intermediate project, which is sent to a refinery elsewhere, or are you going to go the whole hog and produce the salts? And quite frankly, Charles, that question is premature, and it'd be foolish of me to answer, because we don't know what started the process. What we're going on, we're going to make a concentrate that we export, or we'll be making a final product. And quite frankly, to answer that question now would be far too early, far too presumptuous, and quite frankly would be whatever answer I give. I couldn't put hand on heart, and I've learned that just don't do it. So quite frankly, rare earths are not copper. Again, I said some time ago that rare earths are not copper, and then when it comes to processing, the same applies. There's several stages post flotation that one has to go through in order to create the final product. It's not easy, and anybody who thinks it is are kidding themselves.
No, it's not. I guess, between drilling and developing that flow sheet, it's going to cost a bit of money. So is the idea to self-develop? Are you looking for a partner with a strategic player, or potentially an exit once you've defined that resource?
I mean, if you look at critical metals, we're actually in Greenland. I think they've got a $1.5 billion joint venture with the Saudis. I think the market cap's somewhere about that. So when you talk about $1.5 billion for 50%, it gives you some idea of the size of these projects. So if you get a good one, and this is a good one, or has all the potential to be a good one, inevitably we will need a world-class partner for a world-class project.
Good to hear.
Yeah, just tell us, because obviously we're in a situation where we've got this rare earth project in Kendrick. Kendrick ultimately has been a bit dormant for a while, Colin, but you've also got the other project in Zambia, which is copper, which goes back to your thesis of copper's going to going to be a thing that maybe people have to fight wars over. So tell us a little bit about Blue Fox.
Blue Fox is on the border. It is in the northwest. It's on that Western Foreland thrust and fold belt, which goes all the way up to Kamoa. All the way is not actually a million miles. It's actually 100 kilometers. And so it's in that very highly prospective northwestern area, which contains the Western Foreland and the fold and thrust. And as you know, the fold and thrust is very well named, but it has led to ore bodies. And we all know that the Western Foreland is very prolific. Up near Kamoa, Kamoa is the second richest mine in the world, but there's 2 or 3 mine-ready deposits in and around Kamoa, all with their own little subtleties. This project that we've got, Blue Fox, was previously owned by Anglo-American Corporation, and they've done a lot of work. So again, we're not starting from a flat start with no history, basic field work. No, we've got areas of artisanal work, previous work by Anglo, which is in the files, and so it's very prospective in the right environment, and is in the same commodity list, i.e. critical metals, strategic metals. And we intend to it's not far off drill ready. I think there's quite a bit more evaluation to do before we decide the actual point where we do other than reconnaissance drilling. So we probably do blast hole drilling initially to identify the best targets before we bring in the big drill machines. So yes, Blue Fox is the, shall we say, the other key project in the stable.
So all of this for 1.2 million pounds at the minute.
Not even that, Kevin. I think just over $1 million, isn't it?
Yeah. Well, as we speak, we're trading at 0.38, so maybe just over $1 million.
Yeah. So yep.
Just over £1 million. Yeah. Obviously, there's going to be potential for tremendous upside. So let's see where that all leads. We look forward to hearing from you in the not too distant future about Bezant, African Pioneer, and Extract, because we're all moving, and Galileo, we're moving in the right direction with all of them. And with 4,900 gold, over 13,000 copper, and silver about to hit $100 in the fantasy market, but the actual real market is $105 plus. How do you see the finances of the projects like Hope and Guard, Bezant, Extract being affected by these metal prices? Because it is bizarre what's going on.
It's bizarre, and I think it's sprung upon us. I mean, I've always been sort of with gold. I've always tried to keep my feet on the floor on the basics that it's not a commodity as such, and it responds to geopolitical tensions, uncertainty, and it's that Robert Friedland saying, if you believe in Armageddon, and then you must invest in gold, and if you believe in a bright new future, you must invest in copper. So, I've been always one of those guys thinking, well, why, the way it goes up when one sort of turns the television on and sees gold as yet another new eye, and it's in basically percentage terms very significant. You just look at it, and then silver, and then copper, and I try to keep my feet very much on the floor. And in terms of all our companies, when I talk copper, if I could see steady state copper at 11,000, I'd have no problems at all, Kevin. I'd be really happy. When I start seeing copper at 15, if it goes there, I know instinctively that it will spike. It won't stay there long, and it will come down. And the question I think that is more important to a little grouping like this, and to be talking to a group of investors on podcasts, is what do you really think is the steady state? And the Australians have satisfied themselves, as Australians do, that it's 12,000. I'm a little bit more little bit more guarded, and as I say, 11,500 would be a steady, or 11,000 would be a very nice steady state when one looks at capex structure, cost structure, and there's an awful lot of money to be made at that sort of price. What do I think of it all? There's obviously a lot of nervous people out there. There's a lot of uncertainty. You've seen now, if we go back, Charles, and you're a great statistician, if you go back, I think it was for 25, 30 years even, platinum always traded at a 14% premium to gold.
Mm-hmm. Well, it's significantly rarer than gold platinum as well.
Yeah, and that was the average 14% premium. And so here we sit now, and you can see all of a sudden people are buying platinum. And palladium doesn't seem to be able to know what to do with itself. And of course, there's a double driver for that. Is one that it's a noble metal, precious metal, can be used in jewelry. But more importantly, everybody recognizes that the EV is tending, the massive demand for EV can't be met. More disposable income on the planet, more people wanting a car, whether it's EV or whatever it is, they want a car. So from that perspective, it's got another driver for catalytic converters. So wherever we look at the commodity space, and then take the weak dollar, we're in a situation where it looks likely to last. But you don't build a mining company on 6 months of wonder. You build a mining company on the ability to project forward at least 10 years and say, well, this price is stable. This price basically might move up 2 or 3% a year. The growth looks like this. And that's how one sort of builds and designs projects. This volatility is too volatile for me. I don't like it. I'm looking forward to stable markets. I mean, it's good for from a stock market potential, but reality says let's have some steady state. Let's see what the steady state for gold is. And copper, I mean, the fundamentals are fairly evident. There is none. The majors haven't discovered any. They're not spending any money on finding. And the juniors around the world haven't found many. And those which were found aren't much cop, or take 15 years to develop. Massive porphyries in the places like Peru, massive porphyries in Chile. I mean, 3's been turned down. So these things take 15 to 20 years to develop. So every time I think I come on your podcast, I'm a bit doom and gloomy and say, I actually worry for the world in terms of copper. Where's it coming from? So, a minute ago, I talked about 11,000, 11,005. 15 might be unsustainable. Who knows? 15,000 might be sustainable. As for the other metals, the precious metals, I'm a little bit confused. And this is a run I never anticipated. It's a run which surprises me. I know we've got the geopolitical uncertainty. I know that Mr. Trump springs a new one on us every day, and probably will continue to until his term is finished.
The understatement of the century.
How much does a Kashmir coke cost? I mean, it just keeps going and going and going. I mean, Kevin, you guys study this closer than me.
Well, the precious metals market. I mean, I did see this run coming, and a few others did, but it's not precious metals per se. It's a collapsing value of the US dollar, and it's the bond market. It's for carry trade in Japan unwinding. It's for Europeans, for Japanese, and for Chinese selling off US treasuries. And then basically, for the past 100 years or so, there's only been 2 repositories of value. That's precious metals and the US dollar, and people don't trust the US dollar anymore. And with Trump in charge, I don't think that's going to change. And the only way that gold, silver, platinum... The thing is, in a bull market, they could crash 30-40% easily before coming back up. So don't think it goes up in a straight line.
And historically, they have done, haven't they?
Yeah, and then pop back up. You know, so if gold went to $3,000 over the next couple of weeks, it doesn't mean it's not going to hit 6 or 7 a few weeks later. But
and just to interrupt you, it doesn't mean all the gold producers are going to go bankrupt.
No,
you can most of them can make nice money. Thank you very much on $3,000.
Well, I mean, the craziest thing for me, actually, much crazier than that, because the precious metals pricing makes sense when you compare it to what's going on in the bond market, and eventually governments are going to have to get control of their spending. The bond market will force them, and that'll push precious metal prices down. But who knows when they'll choose to do that? The bigger thing for me is why oil is so low when metal prices are so high, particularly copper. Because that's rare. That disconnect is not normal. And at the moment,
there's always been a very close correlation, hasn't there?
Yeah, and now there's not. So either oil's going to rise substantially, or copper is going to come back down a bit, or we're in a new paradigm, and nobody quite knows which one it is. All we know is that it's going to be very, very volatile for the next year or two.
We're in a new paradigm. The reality of the situation is when we are talking in a fictional currency in dollar terms. So all of these dollar terms were the firm foundation that you were talking about, Colin, in my belief. So the reality is that this firm foundation is no longer a firm foundation. The dollar itself is in trouble. And when you have a dollar itself in trouble, then you've got an issue. And we could see vastly higher prices than we are now. And I argue as well that I think power or energy generation as time goes by is not going to get that much more expensive, because we cannot let it get that much more expensive with AI and all the need for power that's coming. So and all of those things work in the order that we've been talking about for 2 or 3 years, which is they all need metal, whether that be copper, gold, silver for the conductivity, the rare earths for the batteries, and for the magnets. So all of these things are conspiring that we have had 20, 30 years of people not investing in the metal space. And now, when it's desperately needed, they're all going, oh, why isn't it there? Why isn't it there? And at the same time, you've got the dollar, which basically is losing value, because you cannot have a country with $200 trillion of off-market debt, including the 38 million. And everybody's moving away from the dollar. So nobody wants T-bonds anymore. So they can't just keep on printing. So what's going to happen? It's going to go down in value. That's what we're seeing.
You know what, Kevin? You said something very interesting there, which I stopped talking about, and in 2006, I was going on in 2007, just before 2008. I used to say on this sort of podcast, I don't think were that popular then, but I was regularly sort of recognized for saying the world's paying for 50 years of underinvestment in the commodity industry, whichever commodity you look at. And you know what? I think that in your little sort of debate that you've just given, the discussion you've just presented, that was the strongest feature. There's been total underinvestment up to 2007. Along came 2008, and the investment never sort of picked up. And then we all know that basically there was a bit of a run in 2012, 14. Then it expired. And the last 5 years has seen the pioneer industry, the finders, the discoverers, if you like, being absolutely starved of capital in favor of tech. So that we put all the other parameters in, but I think that simplistically, there's not been enough money chucked up finding replacement resources, and it may be as simple as that, Kevin. With the other stuff, all helping to drive make the problem even more serious. But assuming that is the case, what's the cost of all these commodities? What is it going to do to inflation? What is it going to do to inflation?
We're already in an era of hyperinflation. Only the figures are being massaged, so we don't see it, or we don't see it in the official figures. But we're already in hyperinflation. You only have to go to, these guys will tell you only have to go to Tesco's or Marks and Spencer's or wherever you shop, and there is hyperinflation.
It's not hyper yet. It's coming.
It depends on your... So over the past... in 2025, they said total food inflation for the year was 5%. That's the official figures, right? Now, if I said to you, you could go to Tesco, we've got an imaginary supermarket where the prices are only 5% more than they were 12 months ago, we'd all shop there tomorrow. It's not real. Yeah. We don't believe it. It's as simple as that. And you don't, all you need to do is walk around the shop. It's ridiculous. Yeah.
I don't think we'll see
Donald's economic indicator is how much is a box of eggs. He was on about it the other day. So he's got an egg drive now. So
he's just bought a load of chickens, though. That's the reality.
No, we had I saw a Freddo in Sainsbury's for 50p yesterday. 50p for a single Freddo, and they were 10p not so long ago. It's ridiculous.
Well, yeah. The other thing that is very interesting when we talk about Trump, I don't know whether you're aware of this, but what happened only a couple of weeks ago, less than a couple of weeks ago, was that he merged his business, his social business, with a tungsten play that is effectively doing fusion energy in the US. They've done small-scale reactors. They need so much tungsten, copper, silver, you could not imagine it to create fusion. They will use half of the world's resources in tungsten, at least per annum. They don't have any tungsten. So what are they going to do? This has already happened, and I think Tesla's going to be doing it as well. Amazon's going to be doing it. I think Amazon did do a deal for copper already, right? That the direct technology companies that are now worth literally trillions of dollars are going to be coming to the small miners and saying, we want to buy you out, or we want all of your product for the next number of years. It's happening
because they've relied too heavily. Because they've relied too heavily on the just-in-time model, Kev, for so long, with silver in particular, like Tesla, that now that there's a panic on, massive panic.
But it's also, you know, if you look at like Nvidia's like profit margins, personally, I think that company's in a massive bubble, but it's the poster child for the AI revolution. Massive profit margins. If they put a price floor on the metals and they control the supply of metals, that'll barely affect their margins. But where the miners are, will be hugely encouraging. If you say we're going to lock up all of your supply of copper at $13,000 for the next 10 years, amazing. You know, we hedge.
What a lovely situation to be in.
But at the same time, they can afford it with no problems at all. Do you know? So
yeah, well, what I often say, Charles, is if I go back and not very far, the big discussion was what the effect on the price might be on the final product. The end user is more worried in some cases, in a lot of cases, about not what he's going to pay extra to get it, is he going to get it?
Yeah.
And that really affects his business. You know, there's one thing paying more for it, but not being able to get it. That's no new criteria to bring into the equation. And that's why now the big boys are basically bypassing the trader and doing direct deals with the producer. And that's why traders, not to mention any in particular, traders now are going down the chain a little bit. You know, if you go back not many years again, you had to be ready for production. You had to have the concentrator built and everything ready for production. And then the trader would welcomely give you a prepay. You've got traders now who are actually getting involved in exploration and in getting involved in equity at a much earlier stage than they would have ever considered. So the dynamics of commodity trading are changing, soft and hard for that matter.
Okay, I think we've talked long enough there. I will say, Colin, thanks very much for appearing back on the podcast. It's a pleasure as always.
That's very kind of you all, and I just love talking to you, and thank you very much indeed for inviting me. My pleasure.
Thanks, Colin, and we look forward to speaking to you regarding Bazant, certainly in the near future, and Extract, African Pioneer, and Galileo.
Thank you very much indeed, Kevin. Thank you very much, and eyes on this new venture. Right space, right time. Look forward to giving you good news on this one. Thank you very much again. All the best. Bye-bye.
So let's move on to our second guest this week. We're joined by Sapan Ghai, CCO of Sovereign Metals. Welcome back, Sapan. How's life?
Life's good. Life's been good this week. You saw our announcement around our discovery of rare earths within the tailings, or, you know, as the non-technicals like to call it, the waste stream from our rutile processing.
Yeah, absolutely. Yeah, as you say, the company announced a major uplift at the Cassia rutile graphite project after successfully recovering a heavy rare earth rich monazite concentrate from the existing rutile tailings, and doing so at near zero additional cost. Early analysis shows exceptionally high grades of dysprosium, terbium, and yttrium, with levels that are said to exceed those seen at the world's 5 largest rare earth producers, alongside meaningful neodymium and praseodymium content, opening up the potential for a third revenue stream at a time when geopolitics around rare earth supply are intensifying. So this monazite recovery feels like a surprise bonus rather than something you were actively chasing, Sapan. When did you realize that there was something meaningful here, and how unexpected was it internally?
So firstly, Phil, good job on all those pronunciations of the different elements. Secondly, when did we start getting interested in the monazite? It was really when we upgraded the lab last year. You know, we did that raise early doors last year, and with that money and with Rio's money, part of the bulk processing that we were doing in Lilongwe, we upgraded the lab, and one of the actual pieces of kit was a much larger electrostatic separator. So that separates your electrically conductive materials from your conducting materials. And when we calibrated that machine, when we configured it, and we started putting some drill samples through, a couple of guys in the lab, the geos said, well, hang on a minute, this looks like it could be interesting on the part of the electrostatic separation that was non-rutile, i.e. the waste. And so they decided to do a little bit of chemical analysis, and it was only about 2 weeks ago that we got our first proper results on what turned out to be monazite containing huge amounts of heavy rare earths, which is your friend of mine, Donald J. Trump, over at Davos, said there's no such thing as rare earths, it's rare processing. Well, that's correct for most of the rare earths. It just so happens that we're quite heavy in dysprosium, terbium, and yttrium, which are the rare earths that are rare outside of China.
Yeah, absolutely. And you've highlighted it, as I say in the RNS in the intro, that this comes at this near zero incremental cost, I guess because it's coming from those existing tailings, as you referenced. But how important is that in terms of the risk, CapEx discipline and timelines for the project?
Look, it's exactly the same as when we started qualifying our graphite byproduct, right? We're a rutile mine. We will always be a rutile mine. That is what we're mining for. That is what we're processing for. That is what we want to sell into an absolutely supply deficient market on the rutile side, right? All our rutile will end up in titanium for aerospace and defense, or within the welding industry to build big machines and build bridges and ports, all the rest of it. That's what's going to happen. And because our capex, the bulk of our capex, and because our mining and initial processing costs are all related to the rutile, things like the graphite byproduct and now this potential monazite byproduct, they're going to come out at very cheap. We've already told the market that our graphite is the lowest incremental cost graphite in the world, right? That includes everything in China. And the Chinese love to cut costs in certain ways and means in their own domestic mines. So the fact that we are lower cost than that says everything. So we expect the same situation with the monazite.
Yeah. So Sapan, who's going to take all this resource off your hands?
On the monazite side?
No, I'm talking about the rutile, the graphite, and now this.
So with the rutile, from day dot, as soon as we found rutile in the first drill hole, our discussions have been with Japanese parties. As you well know, that the Japanese and also the Russians are the only guys who produce aerospace grade or defense grade titanium metal. We don't talk to the Russians for obvious reasons. So we continue offtake discussions with the Japanese. On the rutile.
Is that because
side.
You don't speak Russian, or because we don't want to give it to them?
A little bit of both.
Okay.
So look, rutile to the Japanese. I think our graphite will end up in all sorts of hands: European, US, potentially Southeast Asian. And I
suppose my question is leading into all of these critical mineral side of things. Surely the point we're getting to, we're literally at war for these things in situations. We're going to get governments coming and saying, we will fund the project.
So look, going back to your question, we're miners, right? We're not processors. We're not midstream guys. We're not producing the ultimate landing gear for an F-35 jet. We're not producing the propulsion mechanics for a submarine, right? I have no doubt that most of our material will end up in products that end up in US shores. What I'm talking about is who we're giving it to for the midstream processing. And that processing, really those hubs are in allied nations like the Japanese. The Saudis are building a monazite plant. I was there last week talking to those guys. There's plants in Australia, US that are being built to process monazite, for example. There's talk around building titanium sponge production or processing both in the US. There's already a JV with the Japanese in Saudi Arabia as well, and I spoke to those guys last week as well. So, the supply chains, if you think about it, start with us in Malawi, go through a number of friendly friend-shored nations. But I think ultimately everything's going to end up in the US.
It is interesting, isn't it? Because the monazite that you have, it says in the RNS, exceptionally elevated levels of heavy rare earths, exceeding those of the 5 largest producers globally, which is massive. But just in terms of pricing here, these rare earths have just gone insane levels, even over the past 12 months. Terbium at what, $3.6 million per ton. The economics there, particularly when your OPEX on it is going to be virtually nothing, is going to be extraordinarily efficient.
Yeah, look, we're working on the economics. Much like on the graphite side, we're not too concerned about what the grade in the ground is, and we'll figure that out like we did with the graphite. But again, like with the graphite, the grade that's important to us is what's coming out of the processing, right? We're mining this, like I said, for the rutile. So the rutile grade, yes, we care about, but our rutile grade is like 4, 5, 6 times higher than the average globally. So we're pretty happy with that. Our plant's going to have a throughput of 24 million tons per annum, right? We don't need a high grade of monazite to actually have it affect our bottom line.
And I guess, one of the big things with rare earth deposits, and why I personally tend to steer clear of them, even though they're the hot topic of the day, is that processing them is difficult, it's expensive, it's quite dirty generally. The advantage here is that it's already in the tailings, so a lot of the work you might have to do initially has already been done.
Well, it's a bit more than that. It's that, look, if China was the only place that could take on monazite, we wouldn't be so interested in it, right? But the fact that the Australians, the US, the Saudis are all looking for molecules of monazite to put through their plants that they're building is of super interest to us at the moment.
And there's only so much of it in the world as well, the heavy rare earths.
Well, the heavy rare earths, definitely. Just look at it, right? So Mountain Pass, which everyone knows, right? MP Materials, they have a decent amount of NdPr, but then so does everyone in rare earths, right? The only thing there is that they're up and running. How much dysprosium terbium do they have? 0. How much yttrium do they have? 0. Compare that to the Chinese, right? Dysprosium terbium of around, about 1%, less than 1%. And we're clocking up about 2.9% in there. And then yttrium is just super interesting, right? Yttrium's used in various forms, lasers, radars, etc., etc. The price of yttrium has gone from $4 to $6, right? It's gone from $4 to $6 to $270 a kilogram, right? Or $270,000 a ton.
Yeah, well,
that's a 4,000% increase off the back of export controls, right?
Well, it's not that. I mean, you were talking radar and laser systems. Those export controls. It's the semiconductor manufacturing, in my opinion. Because the US is basically throttling Chinese access to semiconductors, except through Singapore. So China's giving it back to them, throttling access to the metal, which is pushing up the prices. So a friendly source of yttrium is going to be super important in the future too. But taking a step back, obviously the rare earths announcement is super important. But also, I think maybe worth reminding people we've got the MRE upgrade coming out shortly. The DFS/BFS is coming out this quarter as well. It's going to be all cylinders on fire.
Yeah, I think the next results you're going to come up, you found some gold underneath all of this as well.
Yeah. Oh, do you know, it's funny. I was having this conversation.
There's gold with a credit of silver about 50 meters down.
Kev, I was having this chat. I was chatting to a fund last week about it as well, about the rare earths. And he was like, yeah, they've got the largest rutile deposit in the world, and possibly the largest graphite deposit in the world, and now possibly the highest grade heavy rare earth element deposit in the world. And it's all conveniently in the same spot. So yeah, if we found the gold and silver, it wouldn't surprise me too much.
Oh, look, we know just how serendipitous this whole discovery has been. It is, and we bang on about this, but this is a genuine tier 1 project, right? It is a tier 1 discovery. When you think about all the players within the world who are interested in whether it be titanium, graphite, rare earths, you can understand why they all want to talk to us. They all want to discuss things on a commercial basis. It's why we got Rio Tinto in early doors, right? Because they still are for now the biggest player in titanium outside of China. And when they heard that someone's got the biggest rutile deposit in the world, boy, did they jump on the chance of getting a foothold on that.
So, do you think the $100 million question? Do you think? I don't even have to ask you the question. You know what I'm going to say.
Go on, ask the question.
Okay. Do you think there's any gold underneath the? No. The question is, are they going to buy it or what?
Look, I think everything that's come out of Rio Tinto says that the titanium's become non-core for them. So it will be awkward, to say the least, for them to then want to pick us up. But who knows, right?
So they're waiting for the gold discovery then under the titanium or under the rutile.
Yeah, we're not actively looking for gold.
I think everybody knows our sarcasm.
We have better things to do with shareholders. Funds.
So I suppose my last question before Charles comes in and technically bamboozles you with something about he knows everything about this project. Are you a buyer at this price?
Myself, yeah, absolutely. Yeah, absolutely. I mean, look at the price versus the MPV and the optimized PFS, bearing in mind that is a Rio Tinto signed off optimized pre-feasibility study. So you can probably, bet your mortgage that that's probably better than most of the junior pre-feasibility studies that come out. And the fact that we did a whole test pit and we processed everything and our future customers have signed off on the product. Put all of that together, and that MPV is coming out at $2.5 billion. Forget the MPV; it's telling you that it's good that CASIA is going to churn out something like $300 million of cash a year for at least 25 years, if not 100 years.
Yeah, but you've only got the World Bank involved, so I mean, it's not like there's anybody important in this project.
Well, exactly. If what has the World Bank done in Malawi? It's connected it to the port. Poor landlocked country has capacity on the seaborne markets. It's doubled or is doubling the electrical grid capacity in the country, and now it's decided to also back who will be probably the largest customer of those two infrastructure points.
Okay, so it's obviously got lots of problems, and therefore we'll see what. That's why it's been discounted by 90% from your current net present value.
Well, I think that's more to do with this isn't simply gold or copper, and it's not in a jurisdiction that's that mining's had 100 years, 200 years of history in.
Yeah,
we are trailblazers here, right? We know that, and that's probably with it. That. Fair enough. Let the market discount that to our price, but there's no way that we are worth, 6 months worth of EBITDA, given that this thing will churn out EBITDA for 100 years.
Yeah. Well, when I come down, if I show up for the next site visit, should I be invited, I will be coming with a gold pan, just rummaging through those tailings just in case. But yeah, I mean, this is the thing, right? Because obviously the stuff that kind of we've talked about and yet kind of because there's new developments all the time, you kind of forget about them. But the Nicaragua corridor, and that railway that conveniently runs straight through or right next to the project, how many billions of dollars are now going into upgrading that, which you benefit from for free, pretty much.
Exactly.
Yeah, or indeed, I mean, let's say everything goes according to plan, and whether the asset CASIA gets sold or whether you're the owner operators, what percentage of the revenue generated becomes the tax from Malawi? How much of Malawi's annual tax take will be contributed by you guys? Do you know?
Look, we'll be a high single-digit percentage of Malawi's GDP, right? Yeah. And that's just direct taxes and royalties. But you think about at the construction phase, we'll have about 1,100 jobs. That'll support another 5,000 indirect jobs, right? Towns, hospitals, schools, all the rest of it.
Or even there's not much of a mining industry there at the moment, and yet there is quite a lot of I would say prospective potential mines. how much, education, how much training, how useful is that going to be to the country in the next 20, 30, 40 years when all these deposits that are being discovered are going to be able to be developed because they have the in-person resource, It's that kind of longer term thinking. And you were talking about the test pit, the way you talk about test pit, that test pit was massive, massive, and yet only covered what, 1 or 2% of the actual area.
It's probably, if you look at the photos of the test pit through our presentations or anything, you multiply that by 20, that's probably the size of the steady state operation.
Yeah, and then or even like you glaze past potential Japanese partners. Toho Titanium validated the rutile product. Toho, I don't think you could get a higher quality validation anywhere in the world. Which I'm
no,
sure
you're right. In fact, the likes of the trading houses like Mitsui have told us that Toho have the most stringent requirements for titanium feedstock in order to produce the titanium metal that they ultimately produce for Boeing, Airbus, Rolls-Royce, all of them, right? It's super stringent. And the fact that they've said, yep, your rutile works means that it works for everyone.
Yeah. And then Kev mentioned the World Bank and the IFC, but again, we're kind of brushing past it a little bit. The IFC is the world's largest global development institution. And for them to sign up to it, it doesn't mean they definitely will, but the interest alone, with the US State Department getting involved as well, project financing for CASIR. I think this is the thing. How much did the IFC throw at projects like that? 70 billion-ish in 2025?
Yeah, it's an inordinate amount of funding that's available through them, but it's more than that, right? If the IFC are going to tell the world, and this is what they're helping us with, this is a collaboration agreement, right? That our DFS, when it comes out, is world bankable, is bankable by the IFC, meets their standards, they are happy to support it. And oh, by the way, it's had all the technical know-how and understanding of a Rio Tinto behind it as well. That just makes institutions, institutional funders, off-takers, all of them just become so much more comfortable with the project. I'm in Cape Town for their mining Indaba in a few weeks, and you would not believe the number of project finance banks who, once upon a time said, "Ooh, Malawi, ooh, rutile, ooh, graphite, not so sure." They all want to meet.
Yeah, and then the other thing is,
Sapan, you can invite me as well, as long as it's to a nice restaurant. I'll happily come along.
Done.
No, beautiful. But I think my final thing is on the IFC. Beyond anything else, I think everyone would agree the number one risk that the project had once you validated the graphite and the rutile, which has now been done, is political risk. And I think we saw that when the share price dipped, when the new government came in and people were a bit unsure. But them getting involved basically signals to the market that the political risk is almost zero now.
The IFC lends $500 million to Malawi a year, right? Mm-hmm. It's intricately involved in Malawi. They have 60 personnel on the ground there. They know the country. They're able to help us navigate, not just us, but help the government navigate certain paths that haven't been trodden down ever in the mining space, right? Whether that be mining legislation, tax legislation, all that kind of good stuff. And we've brought the IFC to that party.
Good. So the party's on, and what you're saying is this is going to get sold for a couple of billion in a few months?
I am definitely not saying that.
Yeah. Okay.
Right. I think we got to find the gold first. Come on, wait, Charles. Have some patience.
The gold, silver, platinum project is going to be conveniently next year.
We are called sovereign after all, right? So
now you're mentioning platinum. You're going too far there, Charles. The platinum's much deeper, surely. But yes, very good. Okay, look forward to speaking to you when we have these stuff coming out for Caceres, and hopefully we'll catch up in Davos.
For sure. It's been a pleasure, gents.
Thanks, Sapan.
Thanks.
Okay, let's have a look at some of the movers and shakers of the week. Goldstone Resources, I guess no surprise. Gold stock up 100%. Steady progress at the Homace mine in Ghana for the year to December 2025, producing 2,912 tons of ounces of gold and generating around $10 million of revenue at an average realized gold price of $3,467 per ounce, despite disruption from heavy rainfall and frequent regulatory inspection. So it looks like things are going pretty well there. Kendrick up sort of 40% on the week. Obviously, we've just spoken to Colin on that one, and no surprises why that was. Tungsten West up 38%. Again, I'd really want to visit the Hemerdon mine. We talked about this, Charles, haven't we, in the past? We should try and get something down there.
Yeah. I mean, the thing is with the Hemerdon mine, it's super interesting because it is one of the highest grade, best quality tin tungsten mines in the world, right?
Yeah.
Yet it's 1.5 miles from the edge of Plimpton.
Yeah.
So what I'd like to speak to them in depth about is how they plan on getting that project up and running. Because if they do, it will be wildly profitable.
Yeah.
But getting up and running when you've got locals who've complained about it for decades when it's tried to get back up and running again, they're going to have to be using very specific, specialized techniques, to ensure noise pollution, air pollution, ground, all of it, So that's a conversation we'd love to have.
SML, I'm in conversation with SML as well. So hopefully we're going to get them on in the next few weeks. I've been speaking to Mark Burnett, who's involved there. So there are 2 tungsten issues or projects within the United Kingdom, and both close to you, I think. One's very close.
I'm in Exeter. I'm right next to the Camborne School of Mines. I'm in Devon. Site visits for all this would be easy. And I don't know. You guys, were you guys at resourcing tomorrow? Just gone?
No, I fell down the stairs.
Oh, you did, didn't you? Yeah. But like every year they have the the Cornish.
The Cornish corner.
Yeah, well, all the Cornish and Devon, people are all together, and they've all kind of been ignored for the past few years. But the past couple of years, they've started to get a lot of interest.
Yeah.
So, it'd be great to talk to all of them, together potentially as well at some point.
But they do amazing pasties and scones on that stand as well.
They do. They get the jam and cream the wrong way around sometimes.
They do, yeah.
Not everyone can be perfect.
It's the Devon way or nothing.
What do you mean get the jam and cream? Which way round is it, as far as you're concerned?
As far as I'm concerned, it doesn't really matter. But tribally, I believe the jam is meant to go first and then the cream.
Definitely.
But I think that's
that's the Cornish way, isn't it?
Yeah, it's the Cornish way. But I think the Cornish, Cornish did it.
Why or how would you want to put jam on the cream? That wouldn't work.
Well, how can you spread it is the question. But then I don't know. I tend not to stress out about it too much. I think as long as you have a scone, then you're winning.
Yes, a scone. Okay, so are we talking currants in the scone or plain scones, or I quite like those raspberry scones.
I think just the plain scone, and then the plain gloss of cream, and then like decent strawberry jam.
Do you do butter as well as cream as well? So you layer butter. Then, no, that's decadent. That is.
That's controversial. That's butter as well.
I mean, do you know what? The thing that really pisses me off is like all the tourist traps around here. Like they charge a lot for cream tea, and that's fine. But they give you like the best scones you've ever tasted and the best cream you've ever had and the best jam ever. And they give you like the worst pot of the most insipid Tetley's tea imaginable to go with it. And you just go, well, giving you expensive tea will probably cost about 10p a customer more. Why ruin it with cheap crap tea?
Don't start me on tea. I mean, I don't drink a lot of tea, but Tetley and Yorkshire tea can do one as far as it's got to be a PG Tips or something like that.
No, we're going down a rabbit.
Anyway, moving on to some of the shakers, not the tea strainers or tea shakers, but the Predator down 30%. Trinidad business update on that one. Not quite sure what the market didn't like on that one, but that one's dropped quite a lot.
I think Predator had a big raise, no?
Yeah, they did, didn't they?
Yeah.
They had a big raise, that's why it was down. Yeah, I mean, they're still trying to get whatever it is they're trying to get out of the ground in Morocco, and I think that's the big issue, isn't it?
Well, I think they've been trying to do it for years, but the thing is, maybe problem's not the right word, but with Predator.
No, it is a big problem. They fail every time.
Yes, but if they ever succeed, it will be humongous. I'm not saying that they will.
I'm not disagreeing with you, but every single time they've done it in the last number of years, they've failed and then failed again. And then gone back to the market, raised more money, failed. Gone back to the market, raised more money.
No, I'm not disagreeing either, but the reason they're able to keep raising that money is because of the size of the prize.
Yeah,
I'm not saying that you should, buy any shares or like take part or whatever.
It's a lottery ticket, basically, is what you're buying.
And, 100%. But you can't. If it does come through, You got to be in it to win it.
Yeah, and there's a lot more lottery tickets than there was before after all these raises as well. That's the problem.
That is true.
Yeah, I mean, the oil and gas is always one of those. We've talked about that in the past. But did anybody see this week the Bitcoin and Gold ETP on the LSE? The LSE welcomed the listing of a new exchange-traded product from 21 Shares AG called the 21 Shares Bitcoin Gold ETP, trading under the ticker BOLD. It began trading on the 13th of Jan and is first UK-listed regulated ETP that combines Bitcoin and gold into a single investment vehicle. So, yeah, interesting that this seems to be relaxing things a little bit on the Bitcoin side of things. What do you make of that, Charles?
Yeah, I think is it ISA and SIP compatible? I'm not certain. I would assume so, but I think if it is, and I'm not certain that it is, then it will be a very, very popular product. I think there's a lot of people that want access to Bitcoin without having the effort of having to open a wallet or go on an exchange like Crypto.com or Coinbase.
Well, we had XCE on Excellent Group last week, and I really like their business model. The whole holding crypto, but the real business is basically headhunting business, and their ability to expand that business and then subsequently then have a treasury of Bitcoin, I think will work. I think you have to have a fundamental business behind any of these Bitcoin treasuries. Otherwise, what are we buying? You might as well buy that ETF if you've got no upside.
Well, I think the bigger thing is that if you're buying into a Bitcoin treasury, and again, not financial advice and just my personal opinion, but the idea is you're taking advantage of the potential upside through the flywheel. The more the company can raise to buy Bitcoin, the better and better and better. Bitcoin is a highly volatile asset. It goes up, it goes down. Whether it goes to 150,000 this year or down to 50,000, different analysts will have different opinions. If you have an underlying business, that means that you can just retain your Bitcoin in treasury when it goes through a winter and keep it until it recovers, which it has done historically. Then
keep it and add.
Yes, indeed. If you don't have that underlying business and you're trying to run a treasury, the problem that you come up against is that the Bitcoin goes down, your gearing goes down, you struggle to raise money, but then you need to spend money just to stay listed and pay all the fees of staying listed.
Well, they came out this week that Smarter Web company, even 3 of the directors, the salaries were £1 million.
Yeah, I mean, would doesn't particularly surprise me. But again, if you actually take a step back, and I'm not saying that those salaries are reasonable or fair, because
that was all 3 of them, by the way. That wasn't £1 million.
No. But if you take a step back and think, okay, so if Bitcoin does, massively rise, as a lot of analysts think it will do over the next 5 or 10 years, Smarter Web has acquired that number of Bitcoins in a certain period of time. What does that look like for shareholders in the next 5 or 10 years? Putting aside right now or the initial, massive rise in the first half of last year, it might be those salaries are justified if they deliver the returns.
Yeah. No, for a company worth a few $100 million, they are justified. It's not, but the issue is you're potentially eating away at the Bitcoin if it doesn't have a yield.
I'll tell you. The reason why Strategy, formerly MicroStrategy, has done so well in the Bitcoin space is that they've only ever added and they've never sold any. It's as simple as that. And the first time you have to sell even one single Satoshi in order to cover your working capital costs, your business model is done and you will be discarded. It's as simple as that.
Yeah. Okay, I'm gonna give everybody an update because it's 1 month from when we picked our stocks. Okay, we're not going to talk about them. I just want to give the numbers. Okay, so this time last month in December, we picked the stocks, our 12 stocks. All 12 stocks are up. We are 33% up on average. Top performing at the minute is Extract Resources, 63% up. Jubilee Metals, 52%. Guardian 51, then Delta Gold is 54 actually, so that's ahead of those. Then we've got Bazant 33, AMRQ 30%, Sovereign 28, AJAX 23, Energy Pathways 15, Sylvanas 12, AJAMET 10, and Incantheris 6.6% up.
Good.
That's not too shabby.
Not too shabby, is it?
Should we just sell it? What do you say the average was, Gav?
It's around 34% up.
Right, let's end the competition now. Sell everything. What a good year. Well done, gents.
Yeah, well done. We've just outperformed, well, not gold, but probably outperformed the S&P
23 days, right? I reckon we can give it up. We'll see you back in 2027.
No, they were picked. They were picked on the 17th of December.
Ah, yeah,
and it's now 23rd or whatever, which we're recording this on the Friday. So yeah, we're up over 30% anyway. That's the safest way to put it. And there are 1, 2, 3, 4 stocks over 50%.
Good, not a bad effort. But any other news you want to talk about this week? Any other sort of significant RNSs?
I think it's just the potential in the resource space, isn't it? I mean, I think we're at the absolute bottom of the situation. Though we see those things have gone up, they're still massively undervalued. Massively undervalued.
I agree. And it came up in the group, I think yesterday in your group, Charles, someone was saying that, you know, that the prices of all these critical minerals and metals and elements are going up, all-time highs. But when is that going to pass through into the value of some of these junior explorers, the ones we've mentioned on this podcast in the past, the ones that we've picked? Like, there doesn't seem to be any liquidity coming back in. Like, when are we going to see that disconnect and that arbitrage get sort of finished?
Well, we speak to our, very good friend Rick Rule. He's always said the metals move first, and then the majors, then the mid-tiers, and then the juniors. The juniors move last, and they move the furthest. And I'll defer to his experience. It doesn't mean every junior, because some of them are just terrible companies. But, in general, if you have a portfolio of juniors, never concentrate on just one or two, because it's, you're asking for trouble. But a portfolio, I think we're going to do really, really well over the next couple of years.
I think we're going to see people who 10-bag their portfolio in the next couple of years. I really do. I
agree. I think you'll have retirement money in the next couple of years.
Yeah.
But
now I've got a question for you while we were talking about basically crypto in general. I'm becoming a big proponent of Bit and Saw and Tau.
Right.
And especially Astrid, because these two guys have now taken over Siam and Mark. What's your thoughts on Bit and Saw and Tau? Because I did see one of your comments that you said it was going to be the growth sector, because we're talking about less than $300 for a Tau token, and obviously all subnets effectively being the potential for big companies themselves. That's the whole point of it.
Yeah, I mean, if you don't know, again, this is just my personal opinion and not any client's opinion. But if you don't know like Bit and Saw itself and what it does, then it's kind of tricky to explain what's going to happen. But I think the most important thing is to understand the halving that occurred in kind of mid-December. So power emissions were cut by 50%. So the supply dynamics have just changed dramatically. So we've got to this position now where the daily issuance has been reduced from 7,200 to 3,600. So the scarcity has gone up. But the really key thing to understand is that both Tau and the subnet alpha tokens are experiencing simultaneous supply shocks. So the emissions are tightened across the entire decentralized AI ecosystem. So as the subnets continue to get adopted with growing institutional interest and the real world AI utility expands, the halving, basically, it's going to be a test now over 2026 of whether demand can outpace supply. And if it does, you're probably going to see it do extremely well. So like Bitcoin, Bit and Saw's halving is hard-coded directly into the protocol. So every 10.5 million tokens that get mined, it halves. And it's really hard to explain in layman's terms, but there's already around 10 million Tau in circulation. Just over half the maximum supply remains to be distributed. So the remaining supply will take twice as long to reach the market. And the key thing is that Bit and Saw has a 2-token architecture. So Tau works as the base layer currency, right? And it functions as the primary medium of exchange across the network. So validators, who secure the protocol, they get compensated. So do the miners. So you can stake for subnet governance, and that's kind of normal. That's generally how it works when it comes to proof of work model. But beneath this base layer is the alpha tokens, right? The subnets that we talk about, the different companies like Tiger Royalties or various others on AIM have, and each one is specific to the Bit and Saw ecosystem, and they work like specialized marketplaces. And there's around 130 active subnets at the moment. When you have the halving, there's a dual supply shock. This is the key point to understand. The halving we had last month. So the Tau emissions are cut by 50%, but the alpha emissions across the subnet pools also decline proportionately. So you have simultaneous tightening across 2 levels, which amplifies the scarcity effects. So you have the scarcity effect of something like Bitcoin, which only has one layer, amplify it across 2 layers, and you'll probably, I say probably, it's no predictions here, you'll see that it goes up massively. And that's basically where we are with Tau, and people just haven't quite understood.
Yeah.
What's
And
going
I
to happen.
think the other point to help people understand is that basically this is a system where you can have decentralized AI in these subnets. There's 128 of these subnets capped now. And they're not all full by any stretch. So you've definitely got good subnets and not so good subnets at this moment. But as you say, if that demand is taken up and people start to invest in those situations and in these particular subnets, if you can own part of the architecture, which there was an announcement from Astrid this week about owning the money side of it, so if anybody wants to buy Tau, they have to go through their particular thing now to make it. I think these guys are going to start buying the picks and shovels as well as having the subnet 127 in it. I'm not even that worried about Tau going up significantly. Just collecting the things and the price even being maintained is going to make a massive, massive return in these companies. I mean, on the stock market, we've got Tiger Royalties, or what was Tiger Royalties, now Tiger Alpha, I think, has 2 subnets, but really only one of them, something's happening. Not sure what's happening with the other. But the infrastructure of what's happening in Bit and Saw is definitely going to be, Astrid is going to be front and center in that. And I think it's going to, I mean, if you imagine, could you have bought Bitcoin at $300? That's the comparison. Now, will it do a Bitcoin? Who knows? But even if it does a proportion of what Bitcoin did, what is the potential upside?
Well, I mean, the comparison that was always made with Bit was Solana, right? And it's quite interesting to note Solana was trading around $244 in mid-September last year. Now it's down to 127. And an argument to be made, the reason for that is the Bit and Saw halving. It's fears that Bit and Saw will take Solana's cake, basically. Whether that happens or not, we don't know. But I did an article on this a few months ago. At the time, Solana had a $77 billion market cap. If Bit and Saw were to match that market cap a few months ago, Tau would have traded at $7,400 per token. At the moment, it's around 200, 250, right? Yeah. So there's a huge potential move there. But at the same time, the institutional interest is growing. Grayscale filed a Form 10 with the SEC talking about institutional portfolios. And it described the network as a combination of Y Combinator of decentralized AI, and then Yuma Asset Management, still Core Capital, Hippias as the first centralized exchange subnet, Signal. All of the structured capital is entering the ecosystem at the same time, in a way that it simply isn't for other cryptocurrencies. But again, this is all just my personal opinion. I think it's going to be one of the better performers over the next 5 years. There
is a company, just talking about Tau, but there is a company that is basically a Tau treasury in the US now. Tau Synergies Inc. is basically US based. I think it's NASDAQ. That is basically just stacking Tau. So they do exist, and they are very keen to be some of those investors that you talked about, Charles, that want to come into these networks and go to the subnets, as well as just literally purchasing Tau as well.
Good. That's interesting. I mean, if you understood that, fair play, because it's quite technical, isn't it? And Charles's explanation was quite deep. But
I'd love to read your article, Charles. Can you post it on your group or something?
No, it's all geo-locked to the US, sadly. But if you Google Charles Archer cryptocurrency, maybe you'll be able to find it.
And get on a VPN to the US. Job done.
Yeah.
Okay. So can you send it to me personally? Then I'm not worried.
Oh yeah, sure. To you personally, no problem.
Sure. Okay. Well, I think we've gone on long enough there. If you do like what you've heard, please do subscribe. Hit the bell icon for further notifications of future episodes. And obviously, thanking you, Charles, as well for joining us. Always good to get your insights.
Lovely. Happy to be here.
Yeah. And have a great weekend, all.
This podcast was brought to you by Roast PR Limited. If you would like to appear on a future episode of The Sunday Roast, please email admin@thesundayroast.net.